Okay. Nicholas, if you hold on just a moment, audio just started. Okay, so now we are recording. And thank you all for joining today's event. I do want to welcome Nicholas Carreras, product manager with Sentieo, here today. So with that, Nicholas, what I'm going to do is pass you the controls, and let's go ahead and get started. Let me make you the presenter. Ball's now in your court. If you can share your desktop, we'll get underway. Thanks for joining us, Nicholas.
Thank you, Cynthia and Interactive Brokers, for the wonderful introduction and opportunity. Thank you to all the listeners. So my name today is Nicholas Carreras. I'm a product manager at Sentieo. I'm going to help walk you through how you can run company analysis and research in Sentieo to identify and track investment ideas. A bit about my background. I spent over 6 years as an investment banker at JP Morgan and the TMT team working on M&A, equity, and credit out of New York and London, and approximately 5 years as a risk arb and special sell-side analyst, in addition to a year as a long-only global and EM buy-side analyst. So all of the workflow that I'm going to go through is what I would have done across all of these roles. The data that we're going to review includes all global public company financials, documents, and alternative data like Google, Alexa, and Twitter. I want to make sure that from the start, none of my comments or analysis that we're going to do here today represent a recommendation regarding any security. This is just an example. As Cynthia mentioned, if you have any questions during the presentation, please feel free to type them into that questions box. And at the end, my colleague Rishi or Denise will review them and pass them on. The last part that I'm going to touch on before starting is underneath the question box, there's a handout PDF, and I have my handout open right now. That is an overview of everything I'm going to do on the screen. So you see me flipping through this presentation. I'm going to leave the presentation and take us right into Sentieo. What I thought could be a lot of fun today was to start by doing a financial screen. So this is my home page for Sentieo, and I'm quickly going to click the button, quickly going to see, okay, I have all of these tools. I'm going to jump into Screener. In Screener, I'm going to say, let's say we're looking for a company in the U.S. Maybe a 3-year performance share price is down 50% to at best plus 5%. So it's a company which has been beaten up. Maybe the share price in the last month is down between, let's say, 75% and 0. Region of incorporation is the U.S. and it has a net cash position. So I'm going to do all of this. And what you're going to see, I have an add filter. And what I'm going to do is I'm going to type in returns. And the returns tells me I can look at stock data, returns. So as I said, I'm going to start and I'm going to do 3-year. I'm going to click select, go minus 50, and I'm going to say to about plus 5, click apply. And you're going to see that I'm going to narrow down the universe to about 15,000 global public companies. And right now it's global. I'm going to type returns in again because I'm going to set that second parameter, which is that in the last month, I want something which has really been beaten up. So I'm going to do minus 75. I'm going to say to 0, click apply. And this is going to bring my total results from approximately 15,000 down to 8,000. So it's still a lot of companies. Great. Quickly enter their filter. I'm going to say region. So I could do region of incorporation, headquarters, or stock exchange, all of which are super helpful, especially if you have several, maybe foreign entities which do a reverse merger into a U.S. company to get U.S. listing. I'm going to do region of incorporation, and I'm going to check the United States. And I'm going to click apply. And again, I'm just running this and narrowing down my results. So now this is really interesting, right? We went from 8,000 companies, and just by doing region of incorporation, we're down to about 850. So this is absolutely great. Next part that I'm going to do is I'm going to say I'm looking for a company which has a net cash position, or at least a net debt to EBITDA, which is negative, so it's net cash. So I'm going to do net debt, and I'm typing this in, and you see how it comes up, net debt to EBITDA. I'm going to take an annual. It's the last year. I can do it as a photo one as well. And I'll do minus 10 to 0. And the idea being I want it to be cash. Great. I've got about 160 companies. And what I could also quickly add in is I could say, let's say I have a minimum market cap. So I could say capitalization perfect market cap, and I could say anywhere between, let's say, 5 billion and maybe 50 billion. I'm going to click apply. And now I'm down to about 8 results. So what I want to make sure everybody sees, Twitter, Skyworks, Gaps, Juniper. We very quickly tell you what sector it's in, what subsector. So if it's an IT company, it's in internet software and services, current market cap. And if I scroll all the way to the right, you're going to have to forgive me there for that slight hiccup. You're going to see that we have all parameters that we've laid out. So I can see my 3-year return, my 1-month return. I'm going to have in creation and my net cash position. So I've got a couple of ways to pick, and I thought it'd be a lot of fun to use Twitter. It's a relatively recent IPO. It's about 4.5 years old. I actually think the current price is below the IPO price. I find that always interesting. It could be for a good reason or not so good reason. And the last part is that I think that one of the things in the US that we've noticed is I've seen a lot of increased mentions of Twitter in the news just because of the president who uses Twitter a significant amount. So I think that's a really interesting tailwind to follow. So that's why I'm going to pick Twitter. What I'm going to do is I'm going to say, okay, let's look into Twitter. I want to try and understand what drives this company's top line. So let's say the revenue growth, the organic growth, and what is a key aspect to margins, right? So what's going on? What's the driver of growth? What's going on today? What's happened in the past? What could be misunderstood today? So you see, I've clicked on this plus button. And again, these are all of the tools that we have Sentieo. So the document search, the ability to search across documents, the equity data terminal, which is our financial data. So all of the financials, segments, multiples, et cetera, of companies. Our plotter, which is our charting feature. Mosaic is our alternative data. Notebook is where we can take notes, share notes, and a lot of other fun features that I'm going to play with quickly. I'm going to jump quickly into document search. And what I'm going to do is I'm going to build a very, very simple query. So I'm going to say right now, without any documents, if I click enter, I have about 20 to 30 million documents. These are all of the global public company documents in Sentieo. We go back about 12 years. But what I could do, I could say, I'm going to look at Twitter. Boom. So I'm putting in Twitter. And I'm going to say, I only want to find in transcripts where there is a mention of organic growth, because I want to understand the top line, what's driving the top line. So NTR is a shortcut for just searching in transcripts. And I'm going to do organic. I'm going to use one of our query operators, which is near 5. And basically, this means that 2 words have to be within 5 words of one another. This is one of the really powerful features of Sentieo. You set parameters to words. I've run it, and we immediately have several results. I'm actually going to click on the date button, and I'm going to say I want to go back 5 years. So we default to 2 years. I'm going to click apply. And now, let's see kind of a history or an evolution of what's been said. So I'm quickly going to jump into maybe our first, or one of the earlier results from June 2015. Perfect. This is a great mention. And what we're seeing is in Q1, we mentioned that we weren't seeing the benefits from the same things that drove Q1 performance, organic growth. Okay, so that's a great one. It's telling you that there's having some issues with organic growth. So what I'll do is I'm actually going to highlight this. And highlight is exactly like you would do with paper. It effectively highlights the sentence that matters or the passage that matters, and it stores it. So it's a really cool way. I automatically have labels, and I'm going to actually click on my pencil. I'm going to use a logo that I have, which is called Overview. I'm going to click on the Overview button, and you'll see that the text has gone green. You're also going to see that I have a little red box with a white 3. I'm putting my mouse over that right now. This highlight has gone into my notebook, and I'll come back to that in a little bit. But at least at the very start, we have our first part about what's organic growth. If I look into July 28, 2015, I quickly see, oh, this is great. Specifically, we did not see organic growth. So this is a company which all of a sudden, if you're not seeing organic growth and revenue growth in a tech company with a 50 times multiple, that could have an impact on the share price. I'm going to highlight this one as well. I really like this result. And I'm going to click into the second snippet, which is the second part that this is mentioned. Oh, and this is another good one. In the near term, organic growth is going to be very low. So if we think about the IPO happening, I think it happened in about November of 13, and there was a massive share price decline, and we'll look at that in a little bit. but this could be a good indicator of why the price came down. Management is telling you it's going to be a low organic growth. So what I'm going to do is I'm actually now going to hop quickly into our one from July 26th. And this is actually a really interesting result because this is going to be where we have a change in the organic growth. And so this is an analyst who's asking, what is happening with the marketing initiatives, organic growth, and the product changes. And below, we see the CFO start talking about, we're very happy to see this. We're seeing growth in MAU, which is monthly active users. Product changes are being positive. So we're starting to see an inflection point. Inflection point is a great query to search for if you want to find companies that are talking about this. But this is basically saying they're reaching an inflection point with organic growth, which means that organic growth should pick up. So I'm going to do very quickly a highlight, and I'm going to just grab this as well, make sure I remember this passage. Click overview. I'm going to keep going up a little bit, jump into some of the more recent areas. And here we go. Up more recently in October of 2017, and this is so post the Trump election, audience growth in Q3 benefited from all three levers, including organic growth. I'm going to click on the second one. I'm not going to do a highlight here. Although we expect organic growth product marketing to continue to drive DAU. DAU is daily active users. I don't think it makes sense to break out the contributions. That's fine. What I'm starting to see here is some real power with organic growth. And actually, I'll do this. It's an easy one to do, and I'll highlight it as well. So I'm going to just now click into my kind of most recent document. All right, and this is the transcript from about 3-4 days ago. And I think that the Twitter price fell about 30% or so after this transcript or this earnings call. So let's try and figure out, was organic growth a part of it? And this is a really interesting part. And I'm going to come a little bit above the organic growth mention. And we're going to see, if you look at the quarter, we saw the impact from some of the work we did. And there's about a 3 million negative impact to MAU from the combination of our health works and decisions to not renew SMX contracts. So this is really interesting. This is all about security measures. So 3 million negative impact means that they're actually, MAU number is going to come down by 3 million. And that's potentially because of fake accounts or cyber bullies doing things which they shouldn't do and being kicked off Twitter. So this is really interesting. And it would really tell you that there's going to be a slowdown. This is going to slow down your MAU growth. And they're telling you, if we step back, we're still really pleased with the performance, but this is definitely an area of risk that's been introduced. And I'm just going to highlight this, and I'll highlight the entire section. So now at the very least, I've got a picture. I know that in 2015, organic growth was slowing down. There was concern. I know that in July 2016, they reached an inflection point. By October of 2017, they were really benefiting from organic growth. And most recently, with all of the issues that we've seen within a lot of the internet application software companies and communities areas with DAUs, MAUs, there's going to be a slowdown. And that could have a big impact on what's happening with the share price. I'm actually going to run now another query. What I'm going to do is I'm going to get rid of this NTR organic near 5 growth. And I'm actually just going to do a very simple one, which is EBITDA margin. And what I'm trying to figure out is, what kind of guidance do they give on EBITDA margin? Do they give any? What's happening to the margin? Is it coming up or is it coming down? Just like I did with the organic growth. I'll start back 2015. I'm going to try and use a similar transcript. So we have this from June 3rd, so it's very similar to the May 11th. And very quickly, look at what they're saying about EBITDA margins. So you'll see in all the results, and my apologies for not saying this earlier, we always give you the number of hits. So this is a hit of your query per document. So this is a great example, and you see I've already highlighted this in the past. So it's talking about top line revenue growth and adjusted margin improved from 19% to 30%. So they were experiencing a slowdown, but their margin was expanding. Great news. I'm going to kind of jump up a little bit and move up to the February 10th, 2016 transcript. And what we're going to see in here, again, clarity on the margins. So they're talking about margin guidance, 25 to 27%, and it was actually closer to 27%. But here's the really interesting part below. They're saying that their long-term EBITDA margin is 40 to 45%. So they're 27% currently, and they're expecting their margin to really increase by about 80%. So this is a really powerful example. So let's keep in mind early 2016, this is still slightly ahead of when they talked about that inflection point. I'm going to keep scrolling up a little bit, and I'm going to just jump into this October 2017 transcript with the EBITDA margin. What I said. And they're talking about they're continuing to improve their GAAP net margin, and they've just reached their highest adjusted EBITDA margin to date. So all cylinders are firing. 2017, organic growth was picking up. EBITDA margins are at the highest they've ever been and reaching or close to kind of their guidance levels. So all of this, very, very, very good news. Now, I'm not going to do this too much, but what I wanted to show is we also have the ability to search quickly within all research reports. So what are analysts saying? And I just quickly did a very simple search. I did Twitter, and I could say in research, increase. What are the brokers saying? Increase, reduce when that's near target price, value, or estimates. So great results with Twitter. Off the back of that poor earnings, they said we would reiterate our sell rating, lower our target price. So that's really helpful to see. We're getting a feeling of what the brokers are saying as well. And I'm going to just hop off out of that. So we've really, really painted a nice picture of what's happened with Twitter from the transcripts. Now, what I'm going to do is I'm going to click this button, and I'm quickly going to jump into our EDT. And our EDT is our equity data terminal where we have all our financials. So I can type in quickly TWTR. This is Twitter. I'm going to jump into Twitter, and you see we have a lot of financial data. And it's quickly pulling it up. I've got my share price. Oh, look at that. So this is fantastically interesting. Here it is with Twitter. We had been in that screen with the 3-year down and with the 1 month significantly down. We could see if I just did it on 1 month, you'll see that the share price has gone from about $25 to about $31. So that's a greater than 30% decline. And if I look at 3 years, it's relatively close to being 0% change. But what I want to do is I'm going to click on our charts button here. And once that opens up, you're going to see that you have options, and I can click on trading multiples or estimates. So what I'm going to do is I'm going to pick on my estimates chart. And what my estimates chart does is it pulls up the historical forward estimates of a company. So what you can see here, and it's a little convoluted to start, but it's Twitter. This is my yearly EBITDA estimate from 2015. And I'm going to show this key. So the stock, which is the dotted blue line, I'm going to hide this. And for now, I'm going to hide 2020 and 2019. And what I want to show very quickly is that as we were going through those difficulties in 2015, 16, with that organic growth, those real lowering of organic growth, and that's that top line, you can see the EBITDA estimates just coming down dramatically. So this red line is 2018. Back in September of 2015, the estimate was about $2 billion, and it came down to a trough of about $750 million, and it's recovered to about $1 billion today. So that's a massive decline. And you could argue the same thing happened for 2017, 2016 numbers, and they actually came down fairly low. I'm going to hide 2016, 2017 now, and I'm actually just going to show 2019, 2020. As well, and I'll hide 20, and I'll just show the NTM 2018, 2019. And what you can see is as there was that pickup with that inflection of growth and the margins expanding, analysts started to up their targets. This is really interesting because we noticed that inflection happened more around the end of 2016. So it took analysts a little bit of time to catch up. And that's kind of the opportunity. It's when there's let's say a separation between the estimates and the price. So I can see that, and I see that most recently, and I'll just see as of July 23rd or so, it looks like all of my estimates, 2018, NTM, and 2018, have slightly come down. So fantastically interesting. What I want to make sure I also do is everything that I do here within Sentieo, I can into Excel. I can save it and I can recreate it. I'm going to quickly hop to one of my Excel templates. And what you'll see is this is our Excel. It's my Excel. We have a Sentieo plugin. And what you could see is I've quickly done a 10-year historical forward NTM estimate for EBITDA for Twitter and some of its peers. And what we had seen in that chart, and I'll quick pull back to it, the NTM is that blue line slightly coming down. This is this number that we're seeing today. So we could say at the end of June, NTM EBITDA estimates for Twitter were about 1.155 billion, and they've come down to 1.147. And then I could look at this across all of its peers. And I can do the same thing for EPS. I'm just moving to the right very slowly, and we can see I've got my EPS estimate for NTM, which went from 77 cents to 71 cents. So I've got about, let's say, a 7% decline in my estimates. And I've got, and even less on EBITDA, and I've got about a 30% decline in the share price. So that's something that I always find interesting. I'm quickly going to move over to the stock. And you can see I can build many of the charts that I have in Excel. I have them in Sentieo. But I could bring all of this data in Excel as well. Also, very quickly do a full check looking at maybe share price and volume. And what I've done up here is I've got my price movement, and I could say, what was my 50-day minimum, average, median, max VWAP, and what's the discount to VWAP today? So ballpark today, I'm at 31, and the discount is I'm just taking my VWAP over the last 50 days is 40.93. I'm at a 23% discount. Over 3 months, I'm at about a 20% discount to my VWAP, and over 12 months, I'm at still approximately a 4% premium. So these are all analytics that we can do in Excel and within the Sentieo EDT area. I'm going to hop right back into, and I'm going to say, I think that analyst estimates, they've come down a little bit, and they're probably still below what their peers might be. And so what I could actually do as well, and my apologies, I'm going to hop into another template I have, and this is another plugin, and it's just that I'm looking at all of the peers of Sentieo, and here I've got the sales growth. And we can say that the average sales growth expectation for the peer group for 2018 is ballpark 25%, 21% for 2019, and 19% for 2020. And if I compare that to Twitter, Twitter is at about 19%. And here's what's interesting. It really falls off dramatically in 2019, down to 12% and 11% in 2020, which is a relatively significant discount to its peers. And what I'll do very quickly, is I'll also show I can chart everything here we can chart. And I see Twitter versus all of its peers. I'll quickly also just hop down and do the EBITDA margin, which we were talking about. And what I can very quickly see is I can see that the average margin here for the peers is significantly below Twitter. But Twitter is a slightly different business model. Snap isn't included here and it's going to be negative for a while. What's really interesting is looking at maybe Google and Facebook. And clearly Facebook is the leader and it has ballpark, 60% margin. I think of Twitter much more similar to Facebook than anyone else here because it's really working on monthly active users, daily active users, advertising. So really model that's much more similar to Facebook than anyone else. And what I can see is that our EBITDA now is guided, right? This is the margin estimate. It's still significantly below that 40% target. So I really think that there's potentially a lot of room of opportunity. And I'm going to hop right back into Sentieo, and I'm just going to click into our financials tab. And in the financials tabs, we have the income statement. And that income statement includes all of the forward consensus estimates. So you can see I have that 19.2%, 12.9, 11.3, which matched what I had in Excel. And I can also scroll down and you'll see that I have the EBITDA margins. What I'm going to do very quickly is let's just start playing around with this and saying, you know what? I think that all of the estimates are slightly low. What I want to do is I'm going to change the revenue growth to 15% in 2019, and you'll see that the number we have here has changed from 3287 to 3349. I'm also can change these numbers, and I think the gross margin, I think it's still really low. It's still low relative to Facebook, and I think that this is easily going to hit 70%. And I'm going to show 70% for 2019 as well. Now, as I've done this, all of these changes are getting reflected. And I want to make sure I highlight is I'm pulling down, and you're going to see my EBITDA margin. So in the Excel, we were closer to 36 and 38%. And within Sentieo, just by changing my top line revenue and my gross margin, and I think it's just the gross margin, I'm getting to close to 40% as my EBITDA margin. So I'm still below that 40%. What I'm going to do is I'm going to click into financials. I'm going to click into valuation and price target. And I'm going to now say, well, my peers on history have traded at about a 10-point revenue. And I'm going to say, well, Twitter seems, based on these numbers, to trade at ballpark 7 and 6.5 times. What happens if I change this to 10? And so I'm going to change my revenue multiple to 10. And that implies a price of about 42.63. If I change my revenue multiple for 2019 to 10, and I'm going to click enter, it gets me to a price of 48.43. So very quickly, I see that if they can at least hit their 2018 revenue, which I don't think is much, and if they can increase the revenue, if their revenue growth is slightly higher than analyst estimates, the estimates may be coming down slightly, there really is an opportunity to top line. If they can increase their margin, not to the 40 to 45% range, and where they've been at the last quarter, but for a full year, can they get to that 40% range? And can they be at the peer average multiple? You know, I have approximately a 35 to 50% upside in Twitter today. So that's kind of a starting point to saying this could be interesting. I'm very quickly going to double check my thoughts on what are brokers taking into account. What is the sentiment in Twitter, if I can? So I'm going to close my equity data terminal window. I'm going to close my search as well. And I'm going to quickly enter our charting functionality. And what I'm going to do in our charting functionality is I'm going to build a little bit of a fun chart. This is one of my favorite features, is a sentiment score. And I'm going to say, I'm going to take the sentiment of Twitter. Perfect. And I'm going to take the management sentiment. And I'm going to click add series. So what I could see is sentiment has come down. And this is the management sentiment from transcript. It's a Sentieo calculated algorithm. And it seems, this makes sense, right? It seems like their growth was slowing down. They have MAU issues. And I can see we've had a relatively big slowdown in that sentiment. And I can also run a sentiment analysis on the analyst during the call. So I'm going to click add series. And here we go. Let's see what analysts are like. So what's interesting is that analyst sentiment increased on the call, but their estimates have come down a little bit, while management sentiment has come down. So that's really interesting. Management sentiment down, analyst sentiment up, analyst estimates flat to down. I'm also quickly going to turn this into what we call a hybrid series. And I'm going to do A minus B, which is effectively saying I want to calculate the spread. What is managed sentiment less analyst sentiment? And I'm going to quickly make this what I think a little bit easier to do and turn this into a bar chart. And my apologies for the slowdown there. Up. I'll click this. I'm going to call this sentiment spread. Delete that. And there we go. And I can now, so I know that the spread is compressing. So we've seen that the widest spread was in about January or February of 2018. Management was getting much more bullish. Analysts were coming down. Analysts have started to get more and more bullish. Management got more bullish in Q1, and they've come down dramatically. So you can see that the spread increased, declined. And now what I'm going to do is I'm going to just quickly, I can click this eyeball, and I'm going to hide this area. And now what I can start playing around with is what else could I add into this chart, right? And I'm very quickly going to say, okay, let's add in the share price. I'm going to click add series. I'm going to add in maybe a price to sales multiple or an EV to sales. I'll use price to sales in this example. And I'm going to take this as NTM, so always matching what we were doing earlier. So we can see massive price and massive fall in the price. Let's look at the multiple. Looks like the multiple is traded exactly in line with the price, so it's really a multiple contraction, which is driving a lot of this. And what I could very quickly add is I could also add in, maybe I'll put in my EBITDA estimate. So up my EBITDA adjusted, TWTR. And I'm trying to click here. Here we go, IBIS, NTM, and I'm going to just add this series. And we can see that the EBITDA since approximately Q1 has been flat, and there's that decline. So very, very interesting. Despite rising broker sentiment, the EBITDA estimates haven't increased, right? And remembering back to that Excel, the EPS estimates have also fallen. So estimates are flat to declining, while broker sentiment is up and management sentiment is down. Multiples have come down dramatically. So there's, again, as I start thinking about this, it tells you that what's happened in the market could be a dislocation and a reaction to the negativity of the management. The analysts are still positive. They haven't still come across to lowering their estimates, and it seems like there's a lot of room for upside based on the long-term guidance. So this could be just a slight hiccup with the MAU, DAU, the GDPR items to think about. So I really, really love this chart. And what I'm going to do is I'm going to quickly save this, and I'm going to call this my Twitter sentiment estimate consideration. And what I'm going to do is I'm also going to share this with Rishi and Denise, who are on the call with me. Everyone will have this. All of the data that's in this chart, I can also export it into Excel. So I I showed all of the Excel plugin and all of the estimates, but I can also just bring it right into Excel from here. Now, one of the last times I wanted to make sure I touched on, and I'm not going to have time to really play with it much now, but what I want to show is the alternative data. Some of the items that I could do is I could start playing with website visits, Google Trends, Twitter mentions, Instagram, and we all even have a Sentieo index, which is a combination of Alexa, Google, and Twitter. But what I could do is I could think about looking at, let's just do a very simple website. If I just do website Alexa, I'm going to pick Twitter as the ticker. I could also run it as a query with Twitter or Vine. And I'm going to say I will take year-over-year growth, and I'm going to chart this. I'm going to add this series. And what we can see is it seems like from website traffic, since the start of the Trump presidency, about November of 2016, we've had massive increase in website visits to Twitter. And I could quickly chart this, and I could do, I could chart the Twitter revenue. So I can do TWTR, I could pick IBIS consensus, and I can do NTM. And in this instance, I'll also do year over growth, which matches exactly how I've charted the Amazon Alexa data. And here we go. So we've seen that as you've had an increase in Alexa visits to Twitter and website visits, you can see a spike in the estimates. And it's interesting. Right now, we made a slight slowdown back in early 2018. And I don't know the reason for that one yet, so we have to think about it. But I can see that the revenue estimates have been relatively flat, and Alexa web traffic has continued to rise. So there might be an opportunity here to start thinking about how alternative data could be a different channel check to the brokers. So we've covered a lot in this Twitter and so far. And what I want to make sure is, how do we remember everything that we've done? So what I want to take us back to is that doc search when we were in the document search, and we put a lot of those highlights. So what I can do in Sentieo, I'm going to click, this is my notebook. And what we can see is I've got a couple of ideas here, where these are some of the highlights that I made. You can see this is a Q2 2018 Twitter earnings call where they had that MAU issue. And I'm going to scroll down a little bit. You can see here's my Q3 17, and here's we go benefiting from all of the levers, including organic growth, Q2 2016. Here we are. So I've got all of these highlights. They're all in my notebook. But really what I want to do is I want to start thinking about how can I create an investment memo, which will be easy for me to review 1 or 2 years down the line, and which I can share with people. I'm quickly going to click the plus create, click private note, and I'm going to call this Twitter SWOT analysis. And I have a lot of options which I'm not going to click into yet, but what I'm going to do is I'm going to go SWOT overview. I'm going to say top line growth, EBITDA, margin, sentiment analysis. I'm going to add in additional comments. And what I'm going to do very quickly, just like in Microsoft Word, OneNote, or Evernote, I'm going to start formatting my text, have myself some sections. And I can start writing what I want. And I could say, recent transcript is a hiccup in top line growth. What I could do is I put this in. I've got these 3 little buttons. I'm going to click here. I can click on the highlights, and I can start inserting all of my highlights. So this is great. This is this highlight which we had. And I'm going to drag it right here. So Q3 benefited, and I can bring this right in here as well. As the next down, we're happy to see past driven by marketing inflection point. So that's really the important one I want to make sure I want to remember. And you're going to type up inflection point comment Q2 16. I'm going to hit enter. And I'm going to drag it right in here as well. I'm going to keep scrolling down. Yeah, what else is there? Here we go. Organic growth markedly better. Q1 performance. This will be good now. I can also put in all of the items with the down margin, and I'll start just saying, let's say recent earnings, increased headcount. I think they said they're going to increase their headcount by 10 or 15%. Could compress margin in near term, but market already incorporating that negative. Sentiment analysis, I could say analyst sentiment coming down while analysts rising and estimates declining. And you see I can add in anything here, and I could build this into a really great note which I could review down the line, and I could easily always click into my highlights. So all these highlights, you have the ability to click right back in the document. If you didn't make this and someone did this and they shared it with you, you can quickly see who did this, when did they do it. And this brings us to that next fun feature of sharing. I can quickly share my note with anyone in my team. So I've got Denise and Rishi who are handling Q&A. I'm sharing this note with them. If you use OneNote or Evernote, you'll be familiar with tags. What I could do is I could assign tags and tickers. So I could put this and I could assign it to Twitter. And I'll just type WTR. There it is. And I'm also going to put this, and I've got a hashtag, and one of my tags is organic growth. And I'll tag this to organic growth. So this means that I can search this by ticker, by tag, by any language. So in my document search, I could search for this note. Denise and Rishi have received a copy of this note. They can search for it. I can allow them to edit this note. And so I click this team editing. And I can also write a comment which sits on top of the note. So that's an advantage to editing. Sometimes you might not want to let other people edit. And I could say, Rishi, could you look further into top line growth? And I could also then say, Denise, could you look into margin expansion, contraction, as well as the alternative data, maybe Google Trends. And here we go. So very quickly, I want to say in approximately 40 minutes, we have gone from creating a financial screen to find a company which meets some of our basic financial criteria, using our document search to find what's driving the top line, what's driving the margin, what has historically happened, what's changed, and what's driven any changes. Looked at the financial data to see how has what has been said been taken into account by the brokers. So look at historical forward NTM estimates across EPS, EBITDA, looking at all this in Excel and comparing it to peers. What are my peer numbers and how would that compare to Twitter? And if I take those peer and historical numbers and apply them to Twitter today, what value does that imply for Twitter? And what opportunity do I have? Next part is going to charts and creating a variety of charts, including sentiment analysis, to try and get a bigger picture. And the last part is to put all of this analysis into a note, share this with people, tag it, and make sure that I can always review it and keep track of my work. I've gone on for a long time. If you have any questions, hopefully you put them in that Q&A, and I'm going to hand it over to Rishi on my team to kind of go over the Q&A and some other basics. Thank you very much. Really happy to have everyone on the call and hope to answer any questions.
All right. Thanks so much, Nick. So quickly, before the questions come in, so please put any questions in the questions bar and I'll read them out. Just want to quickly mention for everyone on the call, if you are interested in Sentieo, we've set this up through Interactive Brokers where you can sign up directly on your account management page. If you can't find it, you're also welcome to come to our website and request a trial through our website, and we'll eventually set you up through Interactive Brokers. Someone asked about pricing. So through Interactive Brokers, it is $500 a month, and it comes directly out of your brokerage account. So if you sign up through Interactive Brokers, payments automatically taken care of through your brokerage account. And there's one other question that has been asked about broker research. And I'll actually go ahead and answer that one, Nick. So we have broker research integrated into the product, into the document side of things, but it can only be accessed if you have entitlements to those brokers, because otherwise we're not authorized to give access to the broker research. Okay, so Nick, first question, is there a way to see financials, and if yes, are they normalized and adjusted for example, for LIFO, FIFO, for leases, etc.?
Great question. So I'm going to very quickly scroll into EDT where we have all of our financial data, and we have all of the adjustments. And right now what we have is all of these adjustments based on IBIS consensus. So you can very quickly, if I click into the financials section, you'll see that I have EBIT and adjusted EBIT, EBITDA, adjusted EBITDA. I have both margins, and I also have all of those options within my plugin. What we don't have is a reconciliation necessarily between GAAP and adjusted. What we do have, and for that, and so I'll quickly scroll down here and I'll make sure we see, here's my EBIT as reported, here's my adjusted EBIT, and here's my forward-looking EBIT, and it's always an adjusted. It's going to be adjusted forward. Usually IBIS gives us adjusted. We also have all of the data within the Excel plugin, and within the document search, one of my favorite features, which I didn't even show, is we can actually check to reconcile GAAP versus non-GAAP. And I think, if I remember correctly, ADI is a really good example of this. It's a company which gives out GAAP guidance and non-GAAP guidance. And if I do in table GAAP, I'm going to click enter. And if I click into this May 30th earnings, I'll quickly find the delta. Let me just check. I think if I remember correctly, this was one of those examples. Great. So I can quickly find my GAAP gross margin versus my non-GAAP. And what I should be able to do is, if the company discloses all of their, so great, it tells you what is the items which are in their GAAP versus the non-GAAP. What we can do is I can pull what we call similar tables, and it'll pull the same table 16 quarters back. And I can bring that into Excel. So I can easily reconcile what's GAAP, what's non-GAAP, and then I can compare that to my reported number and an adjusted number, and all of that is IBIS. Happy to take the next question, Rishi.
Yep. So actually, if you could just talk about the document search a little bit, is that similar to sort of going through documents and hitting Control F?
So great question again, and this is where Sentieo has it's a really interesting tool. I really love it. And what I'll do is I'll even just run, I'll very quickly do an organic growth without an operator. And basically the answer is we're not a Control F. We allow you to run searches which are very complicated, and it's a smart algorithm. So basically in search, what I'm saying is I want the words organic growth, but they don't have to be next to one another, and it doesn't even have to be those exact words. So we actually run stems and synonyms. So I'm just going to quickly pull open, in this instance, it's a research report. And great, what I can see that I've got organic growth as my result, but it'll also pick up expands organic growth. Here's organic growth. We'll also pick up growing organically as an example. So growing is a stem to growth. Growth is a stem to grow. Organically is a stem to organic. And we'll also have expand relative to growth, where expand and growth are synonyms of one another. The last fun part, and I'm not going to spend too much time here, is that we have what we call query operators. And these allow you to construct your query. So I could say that I want 2 words to be within 15 words of one another. And I could say this near, and I can make that 2 words. So I could say sales near to marketing. It just means that these 2 words, or any of their stems or synonyms, have to be within 2 words of one another. I could also use before, and that sets the order. And lastly, we use anywhere. And this is a lot of fun to build some complex queries, set alerts to them, so you can be alerted anytime someone says anything that could be relevant to you. Thanks, Rishi.
All right, one last question here. So the topic of this webinar was how to improve your fundamental research workflow. So Nick, can you talk about sort of in the last year or so, the biggest improvement that you've made to your research process?
I love that question. I've used a lot of the platforms. The one area that I think is the hugest win is a combination of time saving. I'm sure that a lot of people try and read through documents and understand what people are saying, and you might look at TV and see what the CEO is saying. Sentieo, with the document search, you can find exactly what people have said very quickly. And I think even more important sometimes it is what people haven't said. And it's like searching for that needle in a haystack, where you're trying to figure out, have they ever talked about their organic growth? And it would be pretty much impossible historically to figure that out. Have they said it or not? So I really love the fact that you can check if something has ever been mentioned, and avoid going through that needle in a haystack. And the last part is really integration. I've always found that I've made typos when writing something up in Word, especially when using quotes. And I still remember, this is a decade ago, for a fairness valuation, I accidentally typed in Alltel. It was for AT&T. Instead of having the AT&T quote, I put in the Verizon quote, but I had labeled it AT&T, and my managing director caught that at 5 a.m. And it was too late to change it, but it was not a fun experience for me. And the ability to use highlights and never have to retype what other people have written is a huge value add. And so that's really that integration of saving time, being more precise, are really the big areas.
All right. Well, I think that's all the questions that we have. Thank you so much, everyone, for joining. And thanks, Nick.
Thank you, everyone.
Well, Nick, I'd like to thank you as well, and also thank everyone for joining here today. But before we do leave, I'd also like to give a quick demo on how to access the information. So I'm going to, or from the Interactive Broker website. So I'm going to grab the controls back from you for just a moment here, and let's quickly take a look at the Interactive Broker's website. Now, you'll notice here that I've got the page has already been brought up. You can find Sentieo and the pricing underneath the pricing menu. Notice here there's research, news, and market data. Simply searching for Sentieo will bring you to this page here. I've saved a little bit of time so that I could bring you out here, where you can view a sample report and also visit the website. Now, as Nick mentioned, you can access Sentieo from the Interactive Broker website. You will have to log into your account management system, where you can access or apply for a free 30-day trial. It's available with Interactive Brokers. So go into account management. You'll need to go to the settings, and then under user settings, where you can find the research tools that are available. There you can locate Sentieo and simply click to get access for that free 30-day trial period. So did want to point that out as well. It is available from the Interactive Broker website, and you can find out more directly from here, or simply visit the Sentieo website as well. So did want to give you access to all of this and thank everyone for participating with us here this afternoon. That is going to conclude our session today, so you can all exit using the X in the upper right-hand corner of the screen. Thanks very much to Nicholas and Rishi from Sentieo for today's presentation, and I know Denise is out there who was an extreme help in getting this set up. So with that, we are going to conclude today's event. By the way, do want to remind you, we are recording this webinar, and you can access today's session directly from the Interactive Brokers website. Underneath the education menu, you'll find a webinars link where you can go in and locate today's session. By the way, I will be sending all registrants a direct copy of today's recorded playback in case you want to come back and review any of the concepts that Nicholas went through today. So with that, I want to thank all of you once again for the time that you spent with us here this afternoon. Have a great rest of your day and watch your inbox for a direct link to today's recorded playback. Thanks, everyone. Have a great rest of your day.